value we understood. Then we go on talk about depreciable amount. What do you think depreciable amount is? You under control? Mr. Dia. Fadal.
Percentage of the value of the asset.
No. So we should have a, yes. Right? In that example of the car, what was my cost? Habibi, interfain mawjood. Minni wala bar bilad. I told 22,000. Is that I right or he's right? Okay. This is my cost. And I told you after 5 years, I can sell this car for? My scrap value is how much? 2,000. So, this car is being used for how many years? Over these 5 years, I have used it, so the value of the car has gone down. The value of the car, the process of going down, we define as what? We define as depreciation. We have a proper terminology. I'll come to that. But before that, the difference between these two, how much?
20 divided by 5.
Yeah, very good. That's a calculation. But before we go to that, this number is what this maximum I can depreciate only this. I can't depreciate this. Why I can't depreciate this? Because I have scrap value here. So the amount of from the cost of the asset, the amount of the cost that I am maximum that I can depreciate is what you named as depreciable amount. Equation. There's an equation for this. Cost minus scrap value.
But cost I know already.
Very good.
Scrap value from where I can
What shall I do now? What shall I do now? Tell me.
That means after 5 years I will know.
Habibi. Said we can keep it for 5 years.
Yeah.
After the 5 years, any money that I can get from the market, that is what?
I think his question was, how do you know it's 2,000? Sir?
Yeah.
How do you know? So how can we get now after 5 years?
It's a prediction. It's an estimation.
There are people who can do the valuation also, professional people, right? And also you can have prediction also.
Yes. It's a matter of judgmental experience that comes from over the past several years. See, if you go to street number 10, the people who is having experience of the vehicle, they touch the car, they say, okay, Talatal's bus. Someone is going to...
Yes.
Economic lifetime. Useful economic lifetime. In short, we say lifetime, but that's not correct. It should be useful economic lifetime. The stable sitting in the warehouse for no use. And it is there for last 10 years. That's a different story. But it is stable in the office, people sitting and using, working, and again they're using for 10 years. That's a different story. So we here to find out how economically this asset is being used for how many years. That's the, in a literal way of saying, that's the life of the asset. Pardon? Estimated life, exactly. How many years? In this example we talked about, we said that this car, we can keep it for 5 years. That 5 year becomes the useful economic lifetime. So we know what is PPE, we know what is cost, we also know what is depreciable asset, we know what is scrap value now, we know what is depreciable amount, and we also know what is useful economic lifetime. Now, a golden term, depreciation. What is depreciation? See this table, example, this table is costing us, let's say, 5,000 riyal or 1,200 riyal to be realistic. And I bought 1st of January 2022. Now we are using, end of every year, the finance manager comes and see this table like this. How much value has gone down? Is what the depreciation is? In reality, are we incurring any cash loss or do we losing any cash because of the these fixed assets? No. So please remember one important understanding, depreciation is one expenses, but it is a non-cash expense. That's why when we talk about cash flow statement, we have taken depreciation as one example of adjustments for non-cash item. So now in principle we all understood depreciation is a non-cash expense. Fine. Depreciation is what is the literal understanding? Well, every one of us, what we think, what is depreciation? Yes, brother, you. The because of I'm using the asset, people also think because we use the asset, the value of that asset, the amount that we lost because of the usage is what the depreciation is, a layman thinking. But the proper way of interpreting is a systematic allocation of depreciable amount. What is depreciable amount? This 20,000 of depreciable asset. Can I depreciate a non-depreciable asset? No, I can't. So a systematic allocation of depreciable amount of depreciable asset over its useful economic lifetime. That's exactly what is this depreciation. There is another famous term. You buy a dress, you wear it. After 1 year, what happens? You tear it and use it in the kitchen. Happens or no? Yes. So there is something called wear and tear. Depreciation, the main cause of the depreciation is this, the usage of that asset. Now, another wrong thinking, some perception, some concept or thinking of this depreciation. People think, okay, every year depreciation 5,000, I keep it separate in the bank. So at the end of the 5th year, I take that 20,000 or 25,000, go and buy a new asset. This is not correct. Now, I hope I made it very clear. These are all the part of the definition that is coming from the standards. Remember that. PPE, cost, depreciable asset, scrap value, depreciable amount, useful economic lifetime, and depreciation. Then, here, when I wrote the equation here, I had to add one more word here, which I deliberately didn't discuss. Revalued amount. What happens is, if this building originally costing me 1 million, the owner one fine morning or a day comes to the head of finance and said, my friend, go and revalue the asset. I need some extra boost in my books. So then they revalued it. Now the value comes to 1.2 million. Before it is 1 million. Now, if you had to depreciate, which value you need to use? Either the cost or the revalued amount. You have to use the revalued amount. One major chunk of IA 16 is to discuss about revaluation. I'll come to that. But before that, you need to understand the principal terms. Is that clear now? Good. Okay. I will rotate.